Stocks do very well in periods when inflation is high but falling. I guess where's the lie? What's not to like about this idea that a more benign economic outcome is now looking more likely?
Look, I think you want to consider the fact that this is actually a pretty rare thing to have happen over the last year, which is a CPI day that ends with an S&P that's green. Most of the shocks that we've had, or most of the surprises, or even the non-surprises, have resulted in a negative market on the day of a CPI print going back to last summer. So to see that shift today, this is only the third of 12 where we've had an up day, and this is the biggest up day of them all. So I think if you're somebody that, like myself, that says that price is important and that price is the expression of sentiment in real time, and it gives you some sense of how offsides people are, I think you have to respect the tape, Mike, to agree with what you had to say. And even looking at the leadership, aside from tech, materials, discretionary, it's like a true blue risk-on day. And yes, there are plenty of potential negatives, which I'll get to in a second. But I would finish with what Gwendolyn Brooks said, as quoted by Kanye West on Donda last year. Even if you are not ready for the day, it cannot always be night. So maybe we don't have a recession in the third quarter of this year, the fourth quarter. Maybe it's next year. In the interim, people want to be long stocks, and a lot of people were very underweight.
Yeah, there's no doubt about that in terms of people being caught a little bit flat-footed by this move. We're up more than 15% from the lows. And I guess even if we're not going to make the recession, no recession call, or when does it hit, or any of that, the jobs number last Friday at least suggested that the economy was in some kind of condition to absorb whatever the Fed might have left to do. And meantime, that today's inflation number, who knows, maybe gives the Fed some more breathing room on that front. Do you think the market is miscalculating along those lines at all?
I think the market probably on a day like today is getting a little ahead of itself. We've seen that happen a bunch of times this year. Anytime you've seen the VIX below 20, that this year has been a good time to take something off, not to start buying all new things. So that pattern doesn't have to hold forever. Of course, it can snap, but I'm just talking about the state of the market year to date, or really going back to last November. That's really the type of market that we've had. So today we were back at a 19 handle on the VIX. I don't know, is today the day you want to get all bulled up? And one thing I'm not on the air to be like, hey, everyone made money today, it's bad. It's great. I'm happy. I own stocks too, believe me. Yeah. But let's just understand, there's a lag effect with all these rate hikes. And we have had some monster, historic rate hikes in this cycle. And many of them have taken effect so recently, we haven't even seen them affect the system yet. And I think the Fed wants to slow down here, maybe do a 50 instead of a 75. That's what the market seems to think, so I'll take my cue from there. But just remember what happens in September. September and October, all hell could start to break loose, because the real story is the tightening of financial conditions from QT. So if you were a believer that quantitative easing has given us a great bull market and given us these V-shaped recoveries where the whole plot line gets resolved and everybody's smiling at the end of the half-hour sitcom, then you can't believe that the opposite is also not true. So as of September, Michael, as you know, but maybe some of the viewers don't, the Fed is going to double the cap and let up to $95 billion worth of mortgage bonds and treasury bonds roll off without replacing them. So what that leads to is less reserves, less capital in the banking system, and they're doing that at the same time that they've just done these monster rate hikes. And that is not what happened the last time they did quantitative tightening. There was a much bigger lag in between. This time, they're doing huge hikes. They're going to do huge quantitative tightening. The balance sheet is twice as big as it was in 2014, the last time it peaked. And they're doing these things concurrently into an uncertain environment. So I love today. I love the rally. Yay. It's great. But let's just get our bearings and remember where we are.